Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Krugman's aging. He's gone from the New York Times to Substack. And what's he do? He dials 1-800-NEIL-DUTTA because he wants to find out what in God's name is going on. Macro researchist Renaissance Macro joins us right now. Neil Dutta as well. I want to know, I think everybody in the racket, you were my economist of the year 3 years ago. You're sitting by the bat phone and the Krugman calls up. What is that like?
I mean, I was shocked. I mean, obviously, Tom, as you know, I'm just a lowly business economist. So to have someone of his stature in the field talk to me was, really cool. I mean, and he was the nicest guy, not as cutting as his written prose that we're all used to.
Dead on.
So really the nicest guy, and it was just great to talk to him. Yeah, I mean, he was always very willing to listen to what I had to hear, what I had to say.
Let's get a Krugman update right now. Nominal GDP, the combination of real GDP and inflation. You look at Atlanta GDP. I'm almost framing out a negative nominal GDP, which I know you're going to say is wrong. Where is our nominal GDP forward?
Well, right now, I think nominal GDP is running below 4%. If you look at the compensation data that was released, the personal income and spending numbers that were released last week, we're in a situation now where private sector wage and salary growth is barely running 3%, and the Fed funds rate is over a percentage point above that. So whenever you have incomes running below the rate of overnight Fed funds, it's a sure sign that monetary policy is too tight. And so we got more confirmation of that last Friday.
All right, let's do the math here. I think it's Liberation Day on Wednesday. What's the math mean to you? Like, what do the numbers mean to you? Do I need to pay attention to this stuff? I know it's headlines, but...
Well, I don't think anyone really knows what any of this means. So I think the Journal's reporting today that they're talking about a universal 20% tariff, which I think would raise about close to $3.5 trillion over 10 years. So remember... during his confirmation, Secretary Bessent talked about the various ways that tariffs could be used, right? I mean, one would be like sort of a negotiation. Another way is sort of to get another way that he talked about it was basically revenue source, right? I mean, a revenue source to pay for, extending tax legislation and so forth. And if they're talking more about universal tariffs, it's clear they're moving away from this sort of like, let's negotiate lower tariffs across the board, right? Sort of escalate to de-escalate, and instead move more towards a pay-for mechanism.
I went back to a 2018 essay of Paul Krugman, very wonkish, and he skewers in 2018 Peter Navarro. Peter Navarro's driving the tariff dialogue at the White House right now. Who's pushing back against Navarro? There's no Gary Cohn that I see there now. Is it the Secretary of Treasury who's pushing back against tariffs back to the 1940s?
I mean, I think, Tom, my sense of it is that having some belief in tariffs as a tool of policy is the price of admission in the administration. So at some level, all of them agree with Trump, and they're less likely to push back.
Where's your unemployment rate right now? I mean, I'm on the debate that the Fed has shifted over to a labor dialogue. Does Neil Dutta have an unemployment rate out year end that can give pause?
I think what's important is that the Fed has a forecast of 4.4%, I think, for the end of the year. We may well be there by the middle of the year. And so if you're getting to those year-end forecasts a couple of quarters ahead of schedule, the likelihood, I think, is that they start to pull in some of the rate cuts that they have in 2026 into the current year.
The one of the points from the administration is near-term pain for longer-term gain, and I guess longer-term gain is more manufacturing onshore here in the U.S. How about the auto industry? That seems like one that could happen, but that takes time, I would think, right?
Well, this is one of the reasons why I think you have to make the assumption that they're moving off tariffs as a negotiating mechanism, because at some level you have to keep them on in order to force changes in factory capacity. That takes time. So if people think it's just a temporary negotiating tool. They're not going to actually want to put in the investment to make, to bring more final assembly to the U.S. So, yeah, I mean, I don't know about long-term gain. I do think that there is, you think about what's happening in the markets with a lot of these auto companies. They can't see it just yet. Clearly, investors.
So how do you think about, I guess, the retaliatory tariffs? I mean, most of our trading partners aren't going to just sit there and take it. I would suspect that they're going to step up and
look. I mean, I'm not a trade expert. I'm not Michael Pettis. But what I will say is one of the things you learn in any sort of, I think, introductory international trade course in like a prisoner's dilemma type game. If one person does tariffs, usually the other party puts on the tariffs, and then you have the worst case outcome, right? I mean, there's a retaliation, and so this sort of tit for tat is what is concerning. Right. And I mean, that's kind of where we are.
So much of this is the x-axis. You mentioned the 4-box prisoner's dilemma. Okay, fine. But also it's got to run across a time continuum. We mentioned this an hour ago. Everything's short-term. The market's short-term. The show is short-term. Neil Dutta is trying to go long-term. Where's the horizon the president's talking about? The president says he's going to make America great again in that. Is that out, that manufacturing pickup Paul mentioned, is it out 1 year or is it out 4 or 5 years?
Well, I mean, I don't know, Tom. I sort of reject the premise that this sort of approach will make the country great again. I mean, I understand the need to kind of, for security purposes, you want to have a strong manufacturing base. I think going after China makes a lot of sense. But, just think about it at the most basic level. I mean, if every state was operating as its own country with their own trade policies, do you think that that more prosperity would result that way?
What did Uruguay get? We had 2%, 3%. Somebody's got a beautiful bar chart out where we're bombing ourselves. We don't know, but it appears we're bombing ourselves back to the 1930s or the 1940s. My answer is what? We ticked 5% unemployment. We get a new run rate of unemployment, 4.x%, or maybe months are here at a 5% unemployment rate.
I mean, you may have higher unemployment, but you'd also probably have somewhat higher inflation and weaker productivity growth. And over time, I mean, that, weaker productivity compounds. And so that would that would hurt our longer run living standards as a result. So, I think that like anything, there's balance. There's no such thing as free trade. All trade is managed across countries, right? But I think there's a way to do it right. And there's a way to do it in a haphazard way. And I think we have the latter.
Inflation. What's your call on inflation? Is this going to accelerate inflation, and if so, to what level?
I think the growth consequences of what's going on are much more important than the inflation consequences. I mean, ultimately, in my view, inflation comes down to the household's budget constraint, and the household's budget constraint, as we just talked about, is shifting inward, right? Because the labor markets have cooled, and private sector wage and salary growth is slowing.
Right.
So if you do have, let's say, cars cost more, people have to allocate more dollars to cars, they'll have less money left over. Ultimately, it comes down to the household's budget line.
Neil, I look at the jobs report Friday. Is this the first Trump report? Is this the last Biden report? Is there a freshness to the data where you could say, this is finally Trump mathematics, Trump statistics, I should say?
I mean, I think it's a little bit too soon.
Okay.
I mean, we're talking about the survey week was the 12th. I mean, you started to have some dialing up of the rhetoric, but I don't think it affects things that quickly. I mean, for firms, you're making a trade-off, right? I mean, it's not like people didn't know what they were getting with Trump. He ran on tariff being his favorite word in the dictionary, right? So to me, it's the sequencing that might have put people off.
Are we now where there's a loss of confidence, there's a loss of consumer confidence, there's a loss of business confidence?
Yeah, I mean, I think every month that goes on since the inauguration, it becomes more, Trump. But I will say, look, I mean, I do think that he was dealt a bad hand. Right. I mean, the economic buffer was not the same as it was back in 2017, let's say. Total hours worked in the 3 months ending in February were negative. Right? We just talked about private sector wage and salary growth. It's barely running 3%. That was a February data point. So the truth is that the administration inherited a very imbalanced economy, one where the labor markets were frozen, the housing market was frozen. That continues. And you could argue that they've made a bad situation worse. But I also think their communication has been a little bit challenged, right? Because look at how they sort of talked about the last jobs number, the February report, right? They took credit for the big increase in auto manufacturing employment. There was like a 9,000 increase in factory employment, and for motor vehicle and parts manufacturing. I mean, you can't say, "Oh, this is us," but all that bad stuff is Biden, right? So you have to kind of. I think they would have been served much better had they talked the economy down more on their way in the door, frankly.
Fed, any role for the Fed here? I mean, if 2 rate cuts, maybe a third, I don't know.
Goldman Sachs went back to 3 rate
cuts. Did they? Okay.
I mean, I think the Fed will be going 4 times this year. I think they'll start in June.
Wow.
I wouldn't be surprised if, they could start with 50, frankly. I think the labor markets are in a bad spot, and I don't think that they want to take any chances, frankly. And as I mentioned, ultimately, the growth effects are going to dominate the inflation risks. Okay. And I think if the Fed is taking that on board, they're going to be cutting more aggressively than the markets.
I know you're not on speaking terms with Jeff DeGraff, but when you do talk through your people with Mr. DeGraff, link in his market analysis into your economics over to the grimness of Atlanta GDP now. Talk about, the growth metric. Those are grim statistics in Atlanta.
Well, I mean, I think for Jeff's process, credit matters a lot. And so I think that's what he's looking at. So the fact that credit spreads are starting to wake up a little bit.
Are the vigilantes going to tell the Fed what to do?
Don't they always? I mean, I think, look,
totally
to me,
agree,
you have to watch high yield credit. Like all this stuff that you're seeing from the street. I mean, you mentioned Goldman.
See, he likes Bramo better than me. I mean, it's all there is to it. I mean,
Lisa's on top of the whole credit
high yield spreads are finally breaking.
Well, I mean, you mentioned Goldman. They took up their recession probabilities. I mean, all they're really doing at this point is just following the market. If you look at like the Fed's excess, risk premium, right? Like their measure of using corporate credit to determine recession probabilities. That's basically what's going on. So I think you have to watch credit spreads. And the higher they go, the more likely you have to assume the Fed is going to go more.
Get one more in here, Paul.
So, Neil, what's the data point you're looking at here? What should the market look at? I mean, we're going to get jobs day on Friday. Is that something that's going to be
I'll tell you right now. Go on your Bloomberg terminal, PIWG-TOTL index. You go into the economic workbench, look at that year over year, and then add in the Fed funds rate. If the Fed funds rate is over that year over year rate of growth, bad things tend to happen. And that's where we are right now.
Oh, boy. Thanks. On that note, Tom, bad things tend to happen.
You didn't fill out a bracket.
He's too busy looking at that PI thing.
Oh, me? Well, I went to a Division III school, Tom. I went to NYU. I mean...
Hey, the women's basketball is to die for. Those guys are dominant.
Go Violets.
Hey,
yes.
Neil, congratulations. Huge impact on the nation's market economics. Neil Dutta there with Renaissance Macro. Thank you so much.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us right now, someone who could have written How Not to Invest, Brian Belski, Chief Investment Strategist at BMO Capital Markets. In times like this, in corrective emotion, he has been liberated by saying, stay in the market, have courage. Brian Belski, are you still a bull this morning?
Hi, good morning, Tom. Yes, I am. And I just got back from, yesterday I just got back from being in Canada for a couple of days. So I have some unique perspective on that too. Of course,
Tell us, please.
Part of my responsibilities is to forecast the Canadian stock market as defined by the TSX index. And I'll say this, that, we have a bunch of different responsibilities there, some of which is to manage actually Canadian equity portfolios. And the majority, I'm not being flamboyant here, the majority of our Canadian clients want to sell America and just be in Canada. And we think that that is not only a tactical error, it's a longer term strategic error, given the fact that from a diversification standpoint, and given just the fundamental perspective as America goes, so goes Canada. It regardless of the outcome of this, the countries are still tied together. They're still doing business together. And I think any time in life, let alone investing, Tom, when you make decisions based on fear and emotion, they're wrong. And I think that's what we're kind of heading into. And that's why the market's here today and the next day or so until we get some clarity. And Paul was talking about uncertainty. Oh my gosh, we're in one of these times again. So we're not changing anything.
So I guess you're of the opinion, Brian, that this uncertainty in the marketplace, it will pass to a certain degree at some time in the near future. I'm not sure if it's as soon as Wednesday, but sometime sooner rather than later.
Well, it could be today, it could be tomorrow. And I think what the problem is, Paul, is that, all of us collectively on air right now have been doing this for a long time. And I think there's a couple of problems. Number one is I believe that the near-termism has been exacerbated since COVID, that we've become so reactive. Number two is we have to deal in life, just like, again, investing, with things that we know. We don't know exactly when this is going to stop or change, and it all could change to the positive as well. And I think too many people that do what I do want to make the big negative call and want to assume and infer, and that's really difficult. And so I think what we know is the markets have corrected more than 10%, so we are in correction zone. That's what we know. We also know that this is the fastest correction that we've seen in multiple decades, if not ever, especially since 1990. But at the end of the day, I do believe that America has the best companies in the world. Canada is actually quite close in number two. And this is the time where you want to start a shopping list, because we're seeing some quite exacerbated moves to the downside. And this is where you want to be a long-term investor.
Brian Belski with us, BMO Capital Markets. For investors, Brian Belski, for whatever reason, scared stiff, they don't have the Belski confidence. How do they slide into this market?
Well, we have a lot of faith in terms of what we do things, and faith in our business is fundamentals. And in the fundamental construct of the United States stock market, it has not changed the last eight weeks. And now people are going to say, well, what about the tariffs? And what about stagflation? Come on, man. We haven't had stagflation since the 1970s. They're looking at their academic books to define stagflation, and they don't understand what happened in the 1970s. You and I lived through that. Paul, he's much younger than we are, Tom. So he didn't really live through the 70s. But at the end of the day, you want to find really great companies. If I take two steps back and I say, okay, what are the top 10 companies in the world? Oh, by the way, they're all here in the United States. And so I think this is where you want to make your list, and you want to be an investor in Google and Apple and Amazon and Costco and United Healthcare and Berkshire Hathaway. Tesla is no longer a Magnificent Seven, by the way, but Tesla is a fantastic technology company. And I think you want to own Tesla for the operating system right now, just like you wanted to initially buy Apple for the operating system back in the early 2000s. So I think that's the way you want to kind of think thematically. Now, there's no doubt that there's bumps in the road. There's no doubt that we don't exactly know what President Trump's going to do, or we don't know the retaliatory stuff. But again, we are negotiating. Nothing is certain. And so I think you have to deal with what's certain. And what's certain is make your shopping list of the top 10 companies in the world, be consistent. And by the way, nobody sold at the peak. So this peak to trough analysis that a lot of people are starting to talk about, it's bunk, because people don't do that. And actually more people buy at the top than they sell at the top.
What are we doing in the fixed income world, Brian?
Fixed income, Paul, is a great question. I think fixed income is starting to get a little bit more interesting, especially given the fact that what treasuries have done. So I do think that you want to start looking at 10-year treasuries and start looking at this, dare I say, 60-40 scenario, because if fixed income is going to be part of your portfolio, which we think it should, in this realm of what we've been saying for the last 2 to 3 years is that we're returning to normalization, you can, will, and should have fixed income as part of your portfolio, as you should have small cap and value, so more of a diversified total asset perspective. And I think fixed income is starting to look a lot more interesting.
How upset are the average Canadian towards their friends below here?
Well, I've been at BMO over 13 years, and they are taking things very, very seriously, as they should. They're taking it very, very personally. And I understand I have an excessive amount of empathy in life and empathy for them. I feel very bad for them. But at the end of the day, they also have to look at themselves, and they don't, for all intents and purposes, they're just, it's very like just blame the United States. And I think that's the wrong way to look at it. In a relationship, it's two sides, and people are going to say, oh, it's just Trump. No, it's not. And you have to kind of think about that. So I do believe that calmer heads will prevail. You know, in Canada, what's really interesting, Paul, is that Canada is outperforming the U.S. this year, and no one's talking about this. The actual currency is actually tightened up a little bit in terms of relative to the U.S. dollar. So I think Canada has been our call. Canada's going to continue to outperform. Why? Because from a valuation perspective, it looks really, really good. And the banks in particular are our favorite assets in Canada, along with Shopify.
Brian Belski, thank you so much.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now, she has been of such advantage, Henrietta Treys with Veda Partners. Henrietta, all I'm hearing now is we don't know. Does anyone on Capitol Hill know what the president's going to do?
They wish they knew. I can tell when I go into member offices and speak with their staff that they have very limited ability to sway the president on what's coming. Republicans are in a better position than Democrats for obvious reasons. But there is more of a reliance from members on saying things like, once we have certainty, the markets will calm down. Once we have certainty, manufacturers will know what to do. The tariffs will be, not lasting past the summer. There's a lot of optimism and sort of wishful thinking about how impactful they can be on this topic.
Oh, what a beautiful morning. Oh, did Oklahoma make the Final Four?
No.
Out in agricultural country, Henrietta Treys, it's subsidy redux. Republican farmers are going to get funds from Washington because they're harmed by the tariffs, right?
Right, exactly. So it's acknowledgement that the tariffs are harmful and simultaneously more expensive. The last administration around, we had more bailouts for the farming sector than we had for the auto sector during the Great Recession. Wow. And already, just 2 months into the administration, we're already talking about another round of bailouts for farmers from Brooke Rollins, the head of the USDA. So that's absolutely going to be a part of this. And I think when you talk to farmers or seed associations or trade manufacturers in the agriculture space, they don't want the bailout. They want to not lose their market share to Brazil and Argentina for soybean crops for the foreseeable future and things like that. So it's a major source of anxiety, but they nonetheless support the president more than they support any other candidates. And that keeps them in the playing field and keeps Trump capable of putting these tariffs into effect, which is why we think they will be.
Henrietta, thank you for your research note here. It lays it out day for day what we should expect here this week, because it's going to be a long week here. So, folks, Henrietta's research is absolutely must read here to stay on top of what's happening down in D.C. And you note that tonight, Monday night, Congress actually comes back to D.C. What's on their to-do list here?
This is going to be a fascinating week. So first off, we know that the Senate Republican Conference is trying to pull forward their consideration of the budget resolution. And the budget resolution, of course, is the key that we need to unlock before we can write the tax bill. And they're using this really novel approach where, because the House and the Senate do not agree on whether to cut the deficit, whether to cut $600 billion for Medicaid, whether to cut into a whole host of things, to the corporate SALT deduction, raise corporate taxes, there's no agreement right now between the two chambers. So what they're choosing to do for the first time is pass different budgets for each chamber. So the House gets to write their own tax bill, and the Senate gets to write their own tax bill. And they're going to kickstart that process tonight, votes on Wednesday. And then also the Senate Democrats are going to force a vote on the IEEPA tariffs against Canada, which will be fascinating to watch.
Right now, and folks, we do them with the Monday Audible with Henrietta Treys, is only we can do with Henrietta Treys. Henrietta, maybe off your remit, but I'm going there. There's a zeitgeist out there that the judiciary is going to come to the rescue. How do you respond when people say, on appeal, federal courts or the Supreme Court will somehow right the American ship?
Yes, you're right. That is definitely outside of my jurisdiction. I only like to talk about things that I know about. I would segue and pivot to answer your question and say that the Democrats on Capitol Hill are very much counting on the judicial branch to do any of the blocking that needs to be done because they have no recourse in Congress to stop any of this. And the Republican conference is very supportive of it. So it has to be reliant on the courts. There is no alternative.
Okay. Henrietta, thank you so much for your commitment to Bloomberg surveillance. Just important.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Kriti Gupta with us, of course, in London, driving our morning coverage in London, back end of her day today. Kriti, I just looked at Louis Vuitton. Mr. Arnault is on really good terms with Mr. Trump. And I think the Journal had the article, the family, and they went to the inauguration and all that. Kriti, the drawdown of Louis Vuitton is negative 37%, back to a spring of 2021 pricing. How upset is Mr. Arnault? How upset are European companies at Liberation Day?
Very upset, and I think Louis Vuitton is one example of that, especially the reason it needs to be you tread with caution if you're an international company, and of course European companies have way more exposure abroad than they do where they're based. And I think Louis Vuitton is a great example there, where they're based in France, but the majority of their revenue comes from the two major superpowers of the world, the two largest economies of the world, and that is China and the United States. So the tariff story is going to hit them hard. They also own a spirits business as well, a piece of their business. So a lot of the wine tariffs, champagne tariffs, all of that was coming from the White House and the Trump administration is going to hit Bernard Arnault very hard.
Kriti, what's the feeling across the UK and Europe as to their ability and their appetite to put on reciprocal tariffs on U.S. goods?
It is the last card that they have to play, and they know it as well. And you've seen them do this in pieces, where a great example is when the wine tariffs were actually put on and champagne tariffs were actually put on. The equal amount was also put on from the EU on things like American whiskey or American exports in the drink space as well. They match it eye for eye, but they don't go any further. And that's simply because the impact is harder when it comes to the European growth story when Europe adds reciprocal tariffs versus the other way around. The problem is this is the last card they have to play. So if they were able to put on those reciprocal tariffs or do something like put on quotas, that is really the last thing they can do. But there's a couple of other ways that they can tackle it. And this is kind of the Hail Mary from Europe, which is starting to tackle things like digital services, technology, and financial services, which means that a lot of the trade that happens between New York and London or New York and Paris or New York and wherever would get halted.
Kriti, an unfair question. And, I'm making jokes, folks. Kriti's killing herself 24/7 on this, between running the London show with Anna Edwards and also doing all her great work with everyone except Nathan Hager. Kriti, I look at where we are. Into Ian Bremmer, is it every nation for itself in Europe, including Turkey, or does Brussels have actually a part to play?
Brussels has no part to play. And I think a great example of that is what came out of the summit last week, the coalition of the willing summit when it comes to the likes of Ukraine, for example. And yet they weren't at the table when it came to a ceasefire, even negotiation between the United States and Russia in Riyadh, or even with Turkey's involvement. And Turkey, by the way, is the #1 defense spender with Russia, but is also a NATO member and technically a U.S. ally as well. They're also kind of situated on the Black Sea, where a lot of the grain that comes out of Ukraine and Russia and ultimately hits American cereal and American bread comes from. So the irony of the situation is that the Europeans are trying to have a voice at a table and in a room that the door is completely closed to.
Kriti, streets of London, streets of Paris, Milan, do folks there, do they recognize that things are changing here in the U.S. in a big way, economically, politically, militarily? Do they see the changes that are, or do they feel the changes that are taking place?
I think they absolutely feel it. And a great example, I think, we kind of talked about the economics of it. It's very similar here, where people are kind of voting politically with the pinch that they're feeling in their pocket. So a lot of the kind of voting that happened, say in the last 2020 election, was in some ways a response to immigration, a response to the economy. It's the exact same story here. You see that in terms of support for some of the far right here in the UK, but certainly for the far right in France. And I think that has been the story of the morning, especially with Marine Le Pen now getting banned from running for office. This is a big deal for an international audience that is really being compared to Europe's kind of Trump moment.
Right. So one day I'm in a restaurant in Central Park South, Kriti Gupta, and my back is to the door. It's right behind me, and there's a stir. You could feel the restaurant stirring. And I turn around, and there is Shaq. There is Shaquille O'Neal with an entourage of 4, 5, 6 people. And Kriti, the Shaq is carrying the Louis Vuitton steamer bag 45 that Audrey Hepburn used in Charade. Okay, this puppy comes in. It's a big bag, folks, that Shaq can carry around his tax forms. And he's a big guy. Yeah, big guy, big bag. $5,950. Does Kriti Gupta just tack $1,000 on that? Is that how this is going to work?
Kriti Gupta doesn't tack anything on anything, but it's a great example of why Americans come to Europe to buy the same bag, for example, for much, much less. And it's kind of addressing another key piece that Donald Trump likes to talk about in this tariff war, and the reciprocal tariff war, which is not just tariffs that are put on products, but things what he's calling non-tariff barriers. So that includes things like regulation. It also includes things like VAT. I have plenty of friends from both sides of the Atlantic who've gone to the EU, bought, say, an Apple iPhone product, for example, bought them in that country, come back and kind of redeemed the VAT refund. That is a key piece of this agenda, in that things cost more abroad and maybe less expensive on the European Union. That's the kind of economics that the Trump administration is trying to tackle.
Kriti Gupta, thanks so much. Greatly appreciated.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The newspapers, Lisa Matejka, what do you have?
Okay, so Yankees in the spotlight, right? Everybody's talking about them. I knew
Well,
you
you
would
were
love to
at Yankee
start here.
Stadium on Saturday.
I was there Saturday.
Yes.
I was there for
The 20-run game?
Yeah.
Wow.
Well, 9 in one game. That
Yep,
was
9
crazy.
home runs.
But 15 total in 3 games. I mean, come on. It was incredible. But the reports are saying it's because of these new torpedo bats that they have. So it's all about the way the weight is distributed in the bat. So the wood is moved lower near the barrel, right after the label. So basically, it's putting the mass in the sweet spot, like where you want to hit the ball. But
Do we want 20-run games? Do we want 9-run games?
that's the question. Like, it was crazy right off the bat. It was
Why
like
are we
1,
doing
2,
this?
3, and it was like, whoa, okay.
Well, I don't know. I guess the question is, are the bats contributing to these home runs? I don't know. if
Right,
anybody knows
and that's what, just to put it out there, Aaron Judge did not use one of those bats.
Nope.
He used a regular conventional bat.
Classic.
But it was developed by an MIT physicist turned Marlin coach, Aaron
God.
Leinart.
It sounds like a Jimmy Stewart movie.
telling
It
you.
happens every spring from a million years ago. Next, if we go on this, folks, that's all I'm going to talk about.
Torpedo
I think it's so stupid.
Torpedo bats.
Next,
Oh, okay. So we have to go to Costco, right? Okay. So,
please.
Costco. The Kirkland signature brand that it uses, that private label, it's actually using it as a negotiating tool with suppliers because it's been so successful. I mean, it created it like 3 decades ago, right? Makes everything from like toilet paper to vodka.
private brand.
Yes.
Yes.
I have to admit, I've been going private brand over the last several years. Yep.
And it's catching on. 2024 sales of private labels like Kirkland grew about 4 times faster than national brands. So it was a record high. But the co-founder telling the Wall Street Journal kind of the story behind it. Like they started with this idea of selling a limited number of brands, but sell a lot of them. And then they decided, you know what, we're going to introduce the own brand because, you know, keeps it going. But Kirkland attracts customers who like the lower prices. But yes, it's allowing them to dictate what they want for their shoppers. So, for
Right.
example, they're negotiating like Tide detergent and Ziploc bags. So
Egg
now they can
update.
negotiate that. And the egg update's still the same price.
They haven't come down. What a shock.
They haven't
I'm
come
just
down.
shocked.
But they're not going up. So that's the good news. Okay.
Okay, next.
Have either of you gotten your real ID yet?
No.
What a mess.
It's
Because New Jersey, you can't get You go into the website, you can't get.
You can't. It's hard to get an appointment.
Yes.
I got mine like last year because this has
Because
been
you're
like
Lisa Mateo. You
yes,
do things. You do things when
in
you're supposed to do
advance.
them.
Like
right.
you're supposed to do it.
Yeah.
This has been like years in the making. It's been delayed since the pandemic like 3 times, but the deadline is May 7th. So now everyone is like rushing.
But they're not making it easy where I can just click a button. I got to go to DMV.
You have to go in
Oh,
person
you
with
can't
your
do that
6 points
anymore.
of ID. Like you have to go there.
Why are we
set
doing
the
this, by the way?
appointment.
Why are the driver's license
Security.
worked well? It's been many years since 9/11.
I read about this last night. Texas wins. They have like 80% or whatever because they made it simple.
They have to, yeah. And they have to get it.
Pennsylvania's like in last place, 20-some% or whatever. I use my passport.
That's what I'm saying.
Yes, you
That's
can
what I'm
still
gonna do.
use the passport for domestic. This
I've
is
got
just
the
domestic
card
travel,
for the global entry. That also, I think, is a substitute. I've got that card.
Is it?
Global
I didn't
entry.
know that.
Yeah.
But the weird thing is that they have like DMV lines are crazy and scalpers, they're hawking appointments to get these appointments now too on
definitely in
top
Jersey,
of it.
I'm
so
sure.
it's out of
Just
control.
I know a guy.
Whatever's Texas doing, just do it.
do what
nationwide.
Texas does.
Yes. So get on it. May 7th, deadline.
All right.
Make sure you do it.
I'm
Because
not
the
gonna-
airports
The
are
Yankees-
going to be crazy.
Yes, you are right about that.
So it's like March 31st. Is the season over for the Red Sox?
1-3,
can we
are they?
go
Whatever.
there?
Already?
Oh, it was painful. It's just, I mean, like
Get some
good
torpedo
morning.
bats. Maybe
Get some
morning up
torpedo
at
bats up
90
in Fenway.
92.9 FM in Boston. There's a Red Sox banner on the top of Mount Washington this morning. The newspapers. Lisa Mateo. Thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.